86 or 87% of property in the UAE is bought with cash. Cash will one day run out. Dubai's got this massive growth plan. Their 2030 vision is to almost double in size.
208,000 people have already moved to Dubai this year. They are going to have to think of ways of making it more accessible for people, which is exactly where financing comes in.
It seems to be the biggest takeaway is to get that advice, as early as possible. So one of the biggest questions we get from UK investors that we speak to looking at buying property in Dubai is what are their mortgage options? Are they able to get finance? What sort of loan to value can they get? Today, obviously, we're joined by someone who deals with it every day, Gareth from Interlife, sort of help us break it all down. Looking at your career, Gareth, you moved to the UK from South Africa in 2008. Been in the UK financial markets for the last 17 years, focusing on property debt lending for the past 10 years. And you're the co-founder of Interlife, running the specialist lending team in the UK and the UAE. In this episode, we want viewers to better understand what finance options exist in Dubai, how UK investors are using finance to buy there, and also some of the biggest sort of mistakes for these investors to avoid. So Gareth, from what you're seeing, how accessible now is finance for individual UK buyers buying in the UAE?
We're seeing it becoming a lot more accessible. I often say that the UAE market is still in its infancy on the mortgage side of it. I think the statistics are something like 86 or 87% of property in the UAE is bought with cash. We were with a developer, one of the major developers earlier this year, and they said 95% of all of their units are bought cash. And they've got to hand over about 4,000 units in the next 18 months, and it's bought cash. Now, it's just that the market is relatively small. There's not a lot of players, but it's still very cumbersome with not a lot of options. But what we've seen over the last couple of years, we started looking at growing a business out there just over 2 years ago. And the growth that we've seen over that past 2 years is massive. There's been a lot of changes in there and things are happening all the time. Now, the one thing is cash will one day run out. The UAE is built on developing a lot of it. And we are starting to see a lot more clients now looking to actually refinance properties. So although there's been a lot of people that have bought cash historically, they're now looking at the next growth phases that are happening in the UAE, heading down south around the new airport, Palm Jebel Ali, that sort of way. They're looking at extracting money out of those properties. So we see refinance becoming massive now, a very big thing because it allows you to buy property. There's a lot of things happening in the industry, a lot more options available, but it is very limited here versus here in the UK, because we cover both the UK and the UAE. In the UK, for residential, we've got over 100 lenders. For buy-to-let, we've got over 100 lenders. There's different lenders for buy-to-let. There's different lenders to residential. There's different types of rates, interest-only, part-to-part, repayment. In the UAE, we've got 22 lenders that we can deal with. Everything's repayment. Choice is limited. When we look at what other countries are around the world, you mentioned, I moved here in 2008. Well, the first time I actually came in 2002, and then I stayed for a few years, went back. I enjoyed the UK so much I came back for a second time. But in South Africa, I think there's 9 lenders. Everything's on repayment. So we've got quite used to or spoilt in the UK with the amount of options we have available on lending. So the fact that we've got 22 lenders in the UAE compared to a lot of other countries is actually quite good.
So what does that look like in terms of, obviously our UK clients are very accustomed to getting buy-to-let finance and what that looks like. They have interest-only options, repayment options. Many understand the sort of rental calcs that go into working out how much they'll lend. So how does it differ for those investors who are now looking at getting finance for the first time in the UAE? You kind of mentioned there's only repayment option for one. What are the sort of loan to values that people can get?
There's different ways about how they work out how much you can get. Now, myself, although I live in the UK, I do have residency in the UAE. What that means, it allows me to go up to a 20% deposit that I can put in. So 80% loan to value on my first property. But that's on the assumption that my income is also being derived from the UAE. So there's different things, different works. Most of the time, you're looking at a 50 to 60% loan to value for most people, especially also even if you lived in Dubai, Abu Dhabi, wherever it might be within the UAE, your second property is capped where at 60%. So it's your first one that you can generally, if you are going to be, as I say, if you are a resident there, you can go for a higher loan to value. But talking to a lot of people within the industry, they think those goalposts are going to move in the next few years. They think the way to attract more buyers, Dubai's got this massive growth plan. Their 2030 vision is to almost double in size. You're going to have to get creative on your finance solutions to attract people there. So whilst it's still quite relatively new, we do think things are going to change. And having sat down with a lot of the big lenders there, they also think it's going to change in the next few years.
Yeah, I mean, I guess they want to make it as accessible as possible, in terms of there being, like you say, the cash will run out at some point, right? And Dubai, exactly as you mentioned, the growth plan, they want to double the population. And they're on track to do that. I mean, if you look at the data, I was looking at it recently, 208,000 people have already moved to Dubai this year. 182,000 moved there last year. So they're well on track. And actually, where they thought they would be, the population would be, I think part of their plan was that they would be at 5.8 million people. I think that was actually part of a 2040 plan.
Yeah.
The forecasts are now saying it could be as high as 7.8 million people by that point. But obviously, to continue the trajectory, they are going to have to think of ways of making it more accessible for people, which is exactly where financing comes in.
Is that also not just like the market, the real estate market and the debt market just maturing naturally, like we have here in the UK and the US? And
it is. So the first time I went out to the UAE was, I think, in 2008. And Abu Dhabi, the first place I went to was very sleepy, very quiet.
Yeah.
I went to Dubai quite a bit in the 2010s. Every time I go back, it's just bigger and bigger, even if I've just been gone for 4 months the last time. But what we're also starting to see a lot of, it used to be a place that when you went for 2, 3, 4 years and then you left, it's now become a destination where people are looking to go to for the long term. We're also seeing a lot of the whole GCC area. We're seeing a lot of big companies now making that area, their Asia head offices are actually relocating to Dubai, Abu Dhabi, Saudi place. It's obviously attracting a lot more people. So I just think also the infrastructure there, it's a lot of my friends there have been there for quite a few years now, and where they were originally going to go for 2 years, 3 years, make money and then go somewhere else, people are quite happy there. They settled there. There's a lot more to do. We've seen over the last few years that as a lot more Western culture has come in, which make life a little bit easier for people. There's more restaurants, there's more bars, there's more, they've relaxed certain restrictions on certain
drink
things.
Alcohol.
You can.
It's a big one for Western.
It's a big one. It's still expensive to drink out there, but I think people are now looking at to settle there. Yeah. And with that, it's going to have to change the finance side of it. What we see is, salaries are still strong there, but the property market's very strong, and they need to make it more affordable for you to actually live there. The fact that you're tax-free is great, but you're still limited. So on the finance side of it, just getting back to your original point, a lot of the time your finance on your property cannot exceed 50% of your total net income. So that's including all your debts. So we're going to say in AED, in dirham, but if your salary was, 100,000 dirham a month, your mortgage, if your car payments, if your credit cards, everything can't exceed 50,000 dirham a month.
Yeah.
So it's just different ways how they work out affordability. And you can go up to 7 times income there, which is quite strong versus here in the UK. Actually, just something interesting on the UK side of it. HSBC now launched earlier this week on their premier side, 6.5 times income. So we actually starting to see lenders in the UK now starting to increase affordability. But I think globally, these are things that are going to be shifting.
Just to be super clear on that point, because a question we get a lot is, first of all, people actually understanding that they can get finance. But you're talking about AED income there. To be clear on that point, someone in the UK can get financing in Dubai with no income in the UAE.
Correct, you can. So, the key things is what they look at is they do require income, okay, because it is based on your income, versus in the UK, a lot of it is just based on what the rental income is. Is their rental yield? UAE, it's based on your actual income.
But they will look at your UK income.
Yes, they'll look at your UK income.
Yeah.
But what they can also do, which is great, the difference between the UAE and the UK is that if you're buying an investment property, they can take into account the projected income that you're going to make on that property. That will also count towards your income. So in some cases, if your normal income was falling short of it, when you add in that investment income that property is going to generate, all of a sudden the mortgage can become affordable.
Yeah. Obviously, we've got a lot of clients who we've helped purchase property off plan in new projects. And I guess what that looks like for them is that, you know, a lot of those payment plans with one of the developers we work a lot with, which is Shoba, is they're paying down roughly 50 to 60% of the purchase price in payment installments over the first sort of 2.5 years. So I guess, you know, they're about 3 or 4 years off plan. So they're then starting to think about their mortgage perhaps 6 months out from completion. They've already put down 50 to 60% of the equity. So being able to then finance the rest of that is, I guess, a pretty typical setup for these guys.
I would always say start 6 months out. Now, the process in Dubai or Abu Dhabi or Sharjah, wherever it is that you buy, the mortgage side of it is a lot quicker out there than it actually is here in the UK. It's probably around 2 months in total from the time you actually put the application in. That's with all legals until everything's done. So, but you want to start 6 months out. You just want to make sure that you're in a position so that when we can do the mortgage, there's not going to be any hiccups. So we always say about 6 months out from completion. What we're also seeing right now in the UAE is that a lot of completion dates are actually being brought forward.
Yeah.
They seem to be, you know, out there. I'm not sure if you covered in previous podcasts, but a lot of the building happens 24 hours a day out there. So you can sometimes see some things get erected very quickly. So it's just to be aware. And one of the things is I would always recommend clients is if you're going to be reserving a property now, speak to a mortgage advisor now. Don't leave it only for 6 months out. Have the basic conversations right now. Understand how it will work. Because the last thing you want to do is 6 months out decide, oh, I'm going to change jobs or I'm going to go from employed to self-employed. So if you can understand what is required, and yes, things will change in the mortgage market between now and completion, but it gives you a good understanding. And we do a lot of that for clients is, you know, we speak to them now, not only at the end. Just to make sure that they understand what the process is going to look like.
Another question I have that we get from clients, Gareth, is do they need to visit the UAE to be able to sort and arrange their finance, or can they do that completely remotely from the UK?
They can do it completely remotely. What we do see is a lot of clients do go out there. Some of the solicitors do like you to go out there and do sign over, but it can all be done remotely.
Yeah.
But a lot of people, you know, one of the things is we do talk to people about is, you know, we deal a lot with investors. Generally, when they're out there, they'll see something extra that they buy. And when they're getting ready to completion, start looking for the next thing. But everything can be done remotely these days.
Yeah.
In terms of, again, sort of comparing UK and UAE markets from a financing perspective, one thing that we've seen in UK recently in a tougher market is valuations and people having issues with valuations, down vals. Do you see any of that in the UAE? How does that process work?
A little of it, but not as much. The one thing that we can't control is that we were talking about this earlier. The average new build property changes hands 5 times. Now, when a developer goes to create a development and you know they go and do all their due diligence, they get their valuations done on that. Now, if a person resells their property 5 times between you know, when they first bought it till handover, no one can control those valuations. And sometimes people do become greedy and will overvalue something. And that's something that you can't control. So just always be aware if you are buying something on the secondary market, do the valuation stack up? But we don't see it as much as here. You know, the interesting thing is over here, we've had some down valuations early in the year here because properties are built close to major roads. Now, if you're in Dubai, most of the properties along Sheikh Zayed Road, massive developments that cost millions of pounds. Everyone wants to be close to a transport hub. So it's completely different. So here we penalize the valuation for being too close to a busy road. There, it actually assists you being closer to a busy road.
Obviously, in that sort of market where a property's changed hands 3, 4, maybe even 5 times by completion, completely get that you could potentially run into valuation issues there. But I guess for someone who's looking at buying a property where you're essentially buying direct off the developer and not another seller, I suppose that's probably a nicer place to be in the market.
It is. Better chances of everything being valued correctly. And look, the property growth is quite good out there as well. So when you factor that in, and some of the handovers are quite long, I'm not sure what the longest is that you guys deal with, but I was out there last week and some of the projects were 5 or 6 years away from handover. So when you're factoring that in and the growth, look, it's hard to value something that far in advance, but it is very strong.
Yeah.
Just going back to what you mentioned previously about all of the mortgages in the UAE only being repayment. Obviously, that's very different, right, to the buy-to-let market in the UK.
It's actually quite common across the rest of the world to actually have repayment mortgages. Only a few nations actually do have interest only. And most of the world is repayment and a lot of investors that are investing out there want to repay the asset. They're buying for the long term, not just for the short term.
Yeah.
And they want to cash flow in 5, 10, 15 years, whatever it might be. And the nice thing about the payment plans that they do, unlike here, we traditionally have a 75% loan to value. By the time you've got your handover, you've already paid off a lot of equity in that property.
Yeah.
And clients will just will repay it down. So
what are the terms of these mortgages as well? Like, and how does that work? Obviously, here in the UK, we have a product that you might be getting into it, 2 years or 5 years, and the overall loan of that term might be 30 years, depending on age. How does it work out in the UAE?
So the max term is 25 years right now, but also the max end age for most lenders is 65. But we've seen a few lenders now doing up to age 70. So that's where I go back to say the market's changing there. So it just depends really on your age, will depend on the max term that you can get. We have the same thing, 2 year, 3 year, 5 year fix. 3 years seems to be quite popular right now. After the 3 years, you'd go on to the equivalent of a standard variable rate with the lender, and you can either engage with that lender again to get a new product, like we have a product transfer here, or we'd look to remortgage you to a different lender.
I guess one thing that actually helps, because a lot of the investors we work with in the UK do actually go on interest-only mortgages. They're building property investment portfolios. They'd rather have that capital themselves and reinvest it. But with UAE, like you say, I mean, the reality is, particularly people buying now off plan 2, 3, 4, even up to 6 years, the market's going to mature even further. You're going to have even more lenders and options available to you. But I guess just addressing that point of repayment, one thing where I guess investors are a little bit more, they've got a bit more of a buffer, is that the yields are higher. So obviously your rental yield, where you might be looking typically, well, anywhere from maybe 6 to 9, 10% net, that's obviously going to give you more income to cover your interest plus the repayment. So I guess that's a little bit different to the UK, where sometimes those margins can be tighter because the yields are lower.
Yes, and especially because you're dealing, a lot of stuff is off plan, where you're factoring in future values. So where some clients are doing now is where they've had their payment plan, and some people pay a lot more than just half of it off, is that when they get to handover, they can also do an equity release, where they can, as a remortgage, we call it an equity release there, where we can put a mortgage in place and release equity to buy the next property.
Yeah.
Now, the one thing is just to be mindful of, in the UAE, you can only release equity to buy property in that country. You can't release equity to go do something else with it. So that's just one thing that we do talk to clients a lot about, but it is one of those things that clients are doing. So we're doing a lot of refinance right now for clients who bought 4 or 5 years ago, where they actually put bigger payment plans on. They've come to handover. They now want to buy the next property, but because the rents are quite high, they don't mind going back where they paid off, in some cases paid everything, or they paid off 75, 80%, where we're going to refinance them, take them back to 50 or 60% loan to value to release equity for that next investment.
It'd be good to get your thoughts, whether you've heard anything in the market about, obviously in the UAE, you have these payment plans, installments, where in the UK, you're really putting down 10%, 15%, 20% tops perhaps. Whereas in the UAE, you're putting together anywhere between 50 to 70% of the purchase price over the build. Is there any murmurings of any sort of financial instruments that are going to come into the market, do you think, to help people with the payment plans from a debt perspective? There
is a few things happening in there where lenders are looking at doing mortgages on payment plans. So that is something. There's a lot going on in the industry. There's also a first-time buyer mortgage that's coming out now. It's still linked to a few developments and to a few lenders, but there's things happening in this industry. I think the best thing to do is to follow you guys. Hopefully you'll invite me back on here and we can actually have more conversations and let clients know about what the changes are. But things are moving there.
Yeah.
What we find out there versus here, it's great that they seem to make decisions quite quickly and can get rolled out quickly versus here, we talk about things for many years that we're going to bring in these things and it just doesn't happen.
Yeah. I guess ultimately the best advice coming away from this for people who are looking at buying in the UAE and getting finance is clearly getting the right advice and having those conversations much earlier, especially because the market and the finance market is obviously moving and changing so quickly. So like you say, it's probably more important than ever to get that advice up front, whether you're looking at buying something that's 3, 4, 5 years off plan or actually something that's maybe complete now. It seems to be the biggest takeaway is to get that advice, as early as possible.
I do agree with that. I also say one thing is right now the market out there is completely unregulated for finance on mortgages. I use this analogy a lot where you could have a barber in the UK, moves over to Dubai, and on Monday he's a mortgage advisor. Now the one thing is, and for some people that's perfectly fine, but for a lot of clients, your clients are investors. They want to know that they're investing their money and they want to understand that the person that's actually giving them their finance options understands the market, is an investor themselves. And out that way, and I'm sure you guys will agree with me, a lot of stuff is very transactional. A lot of even the state agencies, the mortgage advice companies, you're just another number. Once they've done something, they're moving on to the next person.
Yeah.
Where we try to understand what the client's trying to do, because a lot of our clients are investors. It's not only one property they're buying, or there might be one now, but they're already eyeing up a second, a third, a fourth. And it's actually being able to sit down with an advisor and actually understand how are we going to actually fund 3 or 4 purchases over the next 5, 6 years.
Yeah.
So I'd just say do your due diligence with an advisor. Don't just go to someone because you've seen them and, ask them, what experience do they have? It's a relationship at the end of the day.
Yeah.
You're going to be working with that advisor for years to come. Make sure you have the right relationship in place with them.
Yeah. Well, thanks, Gareth. Really useful to have you on, all your insights. And if you are watching and you want to get more information and support around getting finance for buying property in the UAE, there'll be a link below and you can click to learn more.